All right, this is good old Friday. All right, in queue. Right now I have it at 8:40 in the morning. Boom, we're gonna hit the daily first. All right, boom. See, we got the daily, the high and the low on the daily marked off already. Actually, I like this. I'm putting this.
Today's Saturday, Mr. H.
Yeah. I loaded Friday.
Okay, so we should be doing that. I should be doing that
Yeah.
following.
You can load up previous days. Yeah, that's how you practice on the weekends and any other time, really. Is you just load up the previous day or any day in the past. Like what I like to do, I like to like if I have a bad trading day, say Wednesday I had a bad trading day. Oh, sorry, stuff is like if I have a bad trading day on the weekend, I will load up Wednesday, and I will redo Wednesday. I will mark up my levels. I'll take
Still got
trades.
your sign on. I'm
You
gonna
know,
cut
I'll
mine.
look at
Huh?
my journal from Wednesday and look at what trades I took, what trades I lost money on, and try to figure out why I lost money on that trade. What did I write down as the reason I took the trade? You know, if I would have waited till it got to a different area before I jumped into that trade, would have been better. You know, I really analyzed. That's why you want to journal your trades per day, because on the weekend you could go back and look at that trade on that day and try to figure out why it was a bad trade. What happened to where you lost money? Or did did it make money? It just knocked you out first and then went in your direction. You know what I'm saying? That's how you perfect your entries. I got my camera on. By fixing those small details like that. You know, one of the main things that got me to be profitable was journaling. Because when I first started trading, my first about 2-3 weeks of trading, they kept saying journal. I was like, whatever. I ain't got no time to be journaling. I was just trying to learn how to trade. And it wasn't until I started journaling and be like, oh, makes more sense now.
Yeah, I'm still working on that.
I know it's not easy. I get it. Because you're in the mode of trading, you're not thinking, let me stop and write this down. You know what I'm saying? But it really does make a difference.
Yeah, Mr. H, I'm trying to figure out. I must be doing it wrong. The indicator line when they're no longer any good or any use. How do you what's your rule to determine that?
If they've already been touched. So I'll just give you an example. I'll pull it up on a 1 hour chart. All right, so 1 hour chart. If you want to look at an old level. Okay, you see this right here. You got 3 going down, right? 3 going down. That means it's a triple threat, right? So you're gonna mark off that one. Boom, triple threat going down. Now, if you go down to the 5-minute chart, that triple threat was from back here, right? That was back here that we marked off that triple threat. As the market came back up to the triple threat, you see how it went through it and came back down. It is played already. It played it right here, so you can delete that level now. But until that level has been touched again, it was created back here. Once it's been used up, it's still good for that day. After that 1 day of being used up, you have to delete it the next day. But like this level up here, this level hasn't been touched yet, right? It was created back here. It hasn't came back up to that level yet. So you keep this level up here until it's been touched, until the market comes back up to it and bounces from it or goes through it or whatever. Then you get rid of it the next day. So the levels that are touched are good for that day, and then you have to get rid of it the next day. But if it hasn't been touched yet, leave it there until it's been touched.
Okay.
Hey, Will, when you trade that level, like I'm looking at some of them, And even that one you showed, are you able to, because what I'm having trouble with is taking on heat.
It's taking what?
Is taking on heat, like when that trade is coming, like all those candles aren't red, right? It never doesn't move in a straight line. But if I look at, like the chart there, it never really went back. If you would have just stayed in that trade after it crossed the line, that's your day, right?
You meaning is like it's no good?
No, go to your level. Let me show you what I mean. Go to your level.
I'll put it back there. You're talking about that 1 hour level.
Or you know what? This is one. Is this a level here? Just show me. Yeah, just show me a level.
Yeah, I'll show you. I'll pull it up.
Okay.
Because he was asking about an old level, so let me put the old level back up there.
Okay. All right, and then go to that 5-minute chart once you.
So this right here, this is a 1 hour chart. This is a triple threat, and then a green closure. Green closure solidifies that triple threat.
Now show me that on the 5-minute.
I am.
Okay.
I was just showing you why it's a triple threat.
Oh yeah.
All right. So the open is 59.50. And mind you, that happened. That was created at 1 p.m.
Oh, was it? Okay. And that's kind of when the market broke, right? It kind of broke around.
Yeah, that was around 1 p.m.
All right. Now you see there, Will. See when it.
Okay, so that was back here around 1 o'clock.
Right. But you see when it, if you could, the challenge is okay.
No, that
see
was
how
1 a.m. My bad. Not 1 p.m. That was 1 a.m. Right.
Right, but that is still where I'm going is being able to hang in, because technically, once it went, then it retested, and then it went down. If you could put the stop loss outside, well, go back to the left, or here's
when
fine.
It first got
Here's
touched
fine.
right here.
Here's fine. Okay, all right. And then even here, I guess you could say, so here it went up, it went all the way up to the swing high, came back, dropped back below that line. It's being able to hang through that trade as it's going in the direction, once it finally closes either above or below that line and stays in the direction of the momentum that pushed it either through or pushed it either long or short. You get where I'm going?
Yeah.
How do you stay in that trade longer?
Have a cushion in your account.
Okay. There we go.
That's why I always tell you guys to do $100 to $200 a day until you build a nice cushion, because the bigger the cushion, you could have sat in this. You could have took the trade. You could have sold it right here and just stayed in the trade.
Yep.
And it went all the way down here. Mind you, this is almost an hour later. But if you could stay in the trade for a whole hour, you would have made thousands.
You'd have made thousands, and that's because I think the levels show you where there's going to be activity, right?
Yeah.
It doesn't tell you what the activity is going to be, long or short, but it's being able to hang tough in that trade while it's doing what it's supposed to do.
Yeah. But once again, if you go down to a 1 minute chart, right? Okay, so you go down to a 1 minute chart. Let me show you.
Yeah, I mean, because you could
this
have
is a 1 minute chart. Look how much money that made. It stopped right there. If you would have jumped into the trade right here, it went all the way down to here. Then it went through it. So you could have made $100 off that bounce. It's just on a 5 minute chart, it looked like it went straight through it because that's a 5 minute candle.
So, but you trade on the 5 minute. What are you?
Yeah, I trade on the 5 minute. So if you would have put a resting order, that 5 minute, it would have got there. The 5 minute would have bounced down, bounced up, bounced down. Then the 5 minute would have went through it. So
yeah, but when it bounced down, it went up through. So where would you have put
the initial touch was right here. It touched it, went down. That's way more than 50 to 100.
Where would you have put your stop? On the Don Chain line?
My stop is my target. So if I want to make $100, my stop is at $100. So 20 ticks.
Okay. So you would have risked 20 ticks to get that. And it could have blew through that or not.
Yeah, see, like right here, if you go to edit, look, profit 20, stop loss 40. So when I get into a trade and give me my $100, I go to another account.
Got you.
That's why when I post my results, it'd be like 400 or 500, or is normally an eval or one of my accounts that have a lot of cushion. But then my smaller accounts that probably at a payout, but only have like maybe $1,000 cushion, you'll see it be like 100, 150, 150, 50, 100, 100. Because I still do that. I get my little 100 and I'm like, all right, next account.
Well, I do notice when you post that, I do see that. So the accounts that have the bigger numbers, thousands and up, what accounts are those? Those evals?
Those are usually evals or PAs that have at least a $5,000 cushion.
Oh, wow. Okay.
Because I have PAs that I've had some of them for over a year.
Whoa.
And that's what I'm telling you. If you just do $100, $200 a day, those not only will you keep your PAs longer because you're not tearing them up by trying to take big trades, but after 4 or 5 months of making $100 a month, all those things are at least $2,000 extra a month. So in 3 months, you got this account is up 6,000. Account number 2 is up 6,000. Account number 4 is up 6,000. You have multiple PAs up $6,000-$7,000 if you just did 100 to 200 a day.
So you're building a reserve basically in the account so that it can basically kick out some money every month.
Yep. And once they take that consistency rule away, bro, for one you have to get a payout for 3 months, right? After you get a payout for 3 months, they take that cap off of you. By the time they take that cap off, if you've been doing 100 to 200 a day, you already up $6,000-$7,000 per account. So by the time they take that cap off, you could take a trade and sit there for 20 minutes in a trade and make $1,000.
Got it.
You know what I'm saying? But
I got you.
I got to get you guys to that point where you have a cushion and they remove that top off of it, to where you no longer have a ceiling on your trades.
And that's after you make what, 25,000 or something like that?
No. That you have to get 3 withdrawal in 3 months. So after about 3-4 months, and you've gotten a consistent withdrawal, they take that consistency off.
Oh wow. Okay.
And that's when it goes to a pro account or something like that.
Yeah. The PA.
No, that's when the PA goes to just a live account, pretty much.
Oh, okay. So you're no longer in that simulated area.
Yeah.
Okay.
And that's what I want. That's what I want to get y'all to do. Get y'all to that point to where you no longer have a cap, but not only do you no longer have a cap, but you have enough cushion to take advantage of not having a cap.
And then you can hang out in that trade.
Then you could take a trade and just sit back and chill. I'm like, up, down, up. All right, cool. We up 2,000. I'm getting out. Like the video I posted. And I kept saying, this is a PA, not an eval. Because I'm up $700-$800. Because I was just sitting in the trade, just chilling.
Okay.
You know what I'm saying? But until you build that cushion, until they take that limit off, I need y'all to focus on that 100 to 200. Because by the time they take that, you still get consistent withdrawal, 500 to 1,000 a month. But then once they take that cap off, it's like, all right, it's time to go. we can take them big trades now.
Okay.
But yeah, you don't want to take a big trade and you still have a cap on you because they ain't gonna let you get a payout.
Got it.
And if you can't get a payout, it's not gonna count towards them removing that cap.
Is that specific to Apex or Take Profit?
Take Profit. As soon as you pass an eval on Take Profit, they don't even have a consistency rule.
Oh wow. Okay.
That's why I said Take Profit honestly is the best one if you can pass within a month.
Yeah.
If you can pass within a month, Take Profit is the best one.
You turn your volume up a little bit.
Because Take Profit no longer has a consistency rule once you pass.
Oh wow. Okay.
You once you pass that Take Profit, I still rather you have a cushion in your account though. Because they still have a cushion. But if you take $1,000 trade, oh well, shoot, you just 1,000 up.
Oh wow. Okay. Got it.
And that's when you use this ATM strategy. That's when you use this ATM strategy because I don't have a profit. If you have a Take Profit account, you could use this strategy because it's still a 40 tick stop loss. It still have a nice little trailing stop on it to jump into profit, but you don't have a target. So if you take a good trade and it's up $3,000, so what? You don't have a consistency rule, and you're not limiting yourself to $100 to $200 per trade because you don't have a salary cap that you can make per day. And you've been a decent trader because you passed a prop firm account more than once by the time you get to that point. So once they take that consistency rule away, you could use this strategy: profit zero. Take a trade and just move your stop loss as you make money instead of moving your target away. And that's how I be making a lot of my money. Even with the evaluations, I don't have a target on my evaluations for the most part.
Quick question: how do you get to old charts? I know I was waiting to jump in.
How do you pull up like previous days?
Correct.
Oh, so you would log into whatever your regular account is. You'll log into that, and you just go to Tools, Import, and historical data.
Okay.
And it's right here. You pick out what instrument you want to trade in practice. Pick the date and just download it.
Okay.
And also in the class is a video, step for step. But yeah, that's how you really practice. That's how I got a lot better at trading. Was I would journal and I would look at the journal, see what bad trades I took, or I would watch what day I took the most trades that were in the negative, and I would then load that day. So if I had a bad Tuesday, I would load Tuesday, and I would literally look at what time them trades were and try to analyze why I took the trade and why it was a bad trade. Like, what happened? Was it news that I didn't watch out for? Did time and sales pop up, right when I took the trade? Like, I want to see like what happened, because most likely when I take a trade is at one of my levels. But if it loses money, I want to know why it lost money at that level. What else was going on that I didn't see? And that will help your vision when you're looking at levels. Because you'll be like, oh, last time I took a trade, this happened and I didn't see it. I didn't catch it, so I'm gonna catch it this time. Just like the trade that I took Friday, it was a good trade. It made like $50, but I didn't pay attention to the percentage. The corner said a 70% chance of a long. I took a short, it only made $50 and then it went straight through it. But that's because I didn't pay attention to that 70% chance of a long. You know what I'm saying? I was like, oh, now I should have been paying attention to that. I probably still would have took the short, but I would have got 50 and got on up out of there. Because you'll notice even if the market is moving fast, it still respects a lot of the support and resistance levels. It may not stop it for a long time, but it'll bounce a little bit, give you a little opportunity to make some money or at least get out of a bad trade. But yeah, this is the minute chart. And as I say, that's how you really can analyze your trades to see which ones really work. Because like this one right here on a 1 minute chart, you can see where it bounced. It bounced right there, went down for a little bit, and then it went through it. But if you pull that same one up on a 5 minute chart, I'll let it load. That's the same trade right here. That's the same trade. But on a 5 minute chart, it looked like it went straight through it. You know what I'm saying? Because this is a whole 5 minute candle. So it looked like it went straight through it. But what it really did was get right here, bounce down a little bit, and then went up. And we're all within that same candle. And then it closed and went to the next step. But you see, once it closed above it, when it tapped it again, that what was once resistance is now support. It tapped it and pushed it up. Came back down, tapped it again, pushed it up. Tapped it again, it might have bounced a little bit, then it closed on the other side. Once it closed on the other side, try to go back up. Nope, resisted all the way down. Try to go back up again, played around with it, went above it. You know what I'm saying? Like you could take that same level. You always ask for random stuff. Put that back. Here, do not drop this on the ground while you have the remote and candle. My bad. He carried that remote around like a little Al Bundy.
So, Mr. H, the indicators are support indicators. We don't mark resistance indicators.
Say it again.
The indicators that we mark are for support, not for resistance, right?
Well, no. If the manual levels like a triple threat, the gaps that we mark off, the high and the low, those are all support and resistance, right? So initially, this line right here is resistance because it was a triple threat. It went down, and on the way back up, it resisted it. But once it closes above resistance, that same resistance turns into support. So support turns into resistance, resistance turns into support. That's why I said this level, since this was the first touch, is still good for this day. After 5 o'clock, it is no longer good. Get rid of it. So since the first time it touched it was at, what time was this? At 6 o'clock in the morning, this level is still good for the rest of the day. As you see, it just went above it and below it, and you could have played off that level all day, all this day, until the market opened pretty much. You could have played off this level. But once 5 o'clock hits, I'm not going to trade this on the Asian market. I'm going to get rid of that level. Give me that other one then back then. But yeah, that's how support and resistance have worked based on what I've tested out. Now, sometimes even after 5 o'clock, this might still be a strong level. I just don't trust it anymore because look how many times it's been played with through the day. And this is only 9 o'clock. So you still got until 4:30, 5 o'clock that this line will still be played back and forth through it. So after 5 o'clock, I normally don't use it no more. But it's good for that day. Did that help? All right, get out of here. I didn't know.
Yes, sir. It helps.
Okay, cool. Because you were breaking up, so I wasn't sure if you said yes or no. But yeah, so that's how that line works. Once it's been used, it's good for that day. The first time it touches it, I think I would still keep it there for the day. But after that day is up, I'll just delete it. I'll just delete that level.
Your mic was going in and out, bro.
Oh, the mic was going in and out? All right, how's it now? Is it clear?
I thought it was my internet, but yeah, your mic going in and out.
All right, let me see. Let me see if I could turn the volume up on it. All right, let's see. All right, is that better?
Yeah, that's better.
That's better. Okay, cool. All right, so let's see. And right now this is 9:03, so there's really nothing going on. And when you're practicing, you can still check the news from that day. So when you're practicing, you can still pull up, Monday, Tuesday, Wednesday, whatever day you load it. Since this is Friday, you want to know what news happened on Friday, because you can't get good practice in if you don't know what happened.
Okay.
Hello?
Yeah, it'll start out fine and then you'll fade out.
Let me pause this. Maybe it's this. It might be the music. Because I don't have too much open. Let me see. Let me close this down. All right. All right. Let's see. Maybe it was the music playing, running a little interference. Maybe I had too much open. Let's see.
Sound a little bit better now.
Sound a little bit better? All right. Let's see. All right, and as far as market, continue marking up. We already started off, during the day. We start off with the overnight high, overnight low.
Nope,
That's
it
all.
dropped out again.
It dropped. Is everybody else hearing my stuff drop out?
Like we can't hear you talking right now.
Oh, that is not good. Hold on.
I hear you. I don't know what it's doing throughout the Zoom. It could be just, I don't know, but I hear you.
Oh, you
Yeah, I
do?
hear you good too. Well,
I hear you
Okay.
too. Yeah, I'm good.
Okay.
It could be me.
Okay. I was saying I haven't touched anything. Everything's still set up the same way.
Did y'all hear him now?
Yep.
Yes. Hmm.
See, Palmer, you got me over here checking all my systems open, unplugging stuff. I'm like, oh man, y'all can't hear me. All right. So after we mark up the day, only thing I really do on the daily chart, only thing I really mark off on a daily chart is the high of this very first candle right here. I just mark off the high and the low. That's all I really do on this. The only time I mark off another level on the daily is if I'm close. Like right here, I see this is a triple threat going down, right? I will mark this if we were closer to it. Because being that this is the whole day, the chance of this going all the way down here is very slim for one. If it did happen to drop down that far, then I would be like, okay, let me look at the daily and see what's going on. I do see that this right here is a nice little would have been a nice little gap, but then you have this one that went through it. So on the daily is really not a lot of levels that pop up often on the daily. But if I notice that I'm close to this, I would mark it. But if I'm not close to it, I'm not worried about it. It's only the high and the low. And then I'll just go down from there to the 4 hour. All right, on the 4 hour triple threat, I'll look for 3. Closure, the opposite color. Okay, cool. We can lock that one in. That's a triple threat. Mark up the open of that very first candle that started that move down. All right, so that's all I really see on the 4 hour. I don't pay attention to the yellow line because the yellow lines are 1 hour levels. We're only looking for the brown lines and that they match up with something that haven't been used up yet. It's not that many of them because there's not a lot going on the 4 hour, right? So you don't see too many brown lines over here because this is the only one. This is the most recent one. So once I look at that, I go down to the 1 hour. Now the 1 hour is going to be a lot more busy because is 1 hour. Every bar only equals 1 hour. So we have a level right here, triple threat, 3 or more going up. I'm gonna mark this one yellow. And it's sitting right on the S1. I don't know if it ever hit that day, Friday, but that would have been a very nice level if it did go down there. But I don't know if it did or not. Right here, this triple threat was a little odd because it starts right here. This candle right here started the triple threat on the way down, but the very next candle actually went a little bit above it and then went down. So I would mark the highest point, the highest open. This was the highest open because it opened higher than this one, which sometimes that happens in the market. The market was here, it went down and closed, and for some reason it just jumped up here and opened and then continued down. There's just a difference in price. Remember, this is a whole hour. So we don't know what happened from 1 hour to the next to make it jump up there, but we go based on the highest one and then down. So that's how we mark that one off. And it's really not too many other levels until you get way up here. So now we're looking at all the yellow lines. And if they haven't been used up yet, I leave them there. This hasn't been touched yet. It was created back here. The market went down. Since this one was created, the market went down. It hasn't been back up there yet. This one was created back here. The market went up. It hasn't been down here and touched it yet. So these are all still good levels. These are all good levels because the market hasn't been up here to touch these levels yet. So until they've been touched, meaning the market has went to them, either bounced down or went through it, until they've been touched, I leave them there because it's still up here. Let me know there's still sellers. There's still people that sell from here. And down here, there's still buyers down here. It hasn't been touched yet. All right. So once I mark up the daily, 4 hour, and the 1 hour, I go down to the 5 minute, and I no longer check those higher levels. I don't check them no more because they're all color coded. Every yellow line is a 1 hour level. Every brown line is a 4 hour level. The red and the green are high and low. So I don't really have to keep flip-flopping between all these different charts. They're color coded, so I know exactly what they are. And now I could just trade for at least an hour because, the next hour is going to be another candle is going to form on the 1 hour. So you have from 9 o'clock all the way till 10 o'clock before you even have to go to the hour. You know what I'm saying? Then I would check, at 10 o'clock, I might go over there, check the hour to see if anything changed as far as like a candle closure. What color did this candle end up closing? Because we still have 49 minutes on this candle. So where this candle closes, if it closes red, I have a potential triple threat being created, a potential. We still have to wait for a closure of the opposite color. So every hour, I will then come back and check to see what happened. But once you mark it all up, you got at least an hour before something else might happen. So you could trade off the 5 minute and not worry about going back and forth checking anything. So that's why I keep it all color coded so that I don't waste time flip-flopping between screens. Because you can miss a trade real quick. You can go look at another screen and you come back like, oh, it didn't hit my level. I could have made some money. I don't like missing money. Now, you'll have another opportunity, but yeah, I just don't like missing money. Yeah, let me put the music back on since it wasn't the music stopping my sound. I gotta have something playing. And I think that was before the open. Was that news or something that made that weird candle? All right, so once again, this is a 5 minute Don chain. I had Don chain on this week. I normally only use Don chain if the market is at an all-time high. I will use a Don chain indicator, but you can use it at any time. I mean, it still works really good. But the one I like is the VWAP. So after I mark up my levels, that's when I put on my indicators. It's calculating. Boom, there we go. All right. So now I have my indicators on there. And indicators, you don't have to use every indicator that I show you. Use the ones that will help you be a better trader. All right. Use the ones that help you concentrate. I just show you different indicators so you know that it's different ones you could take advantage of and learn. The main ones I like is super price predictor, divergence, and the VWAP. Those are the three main ones that I really like as far as taking trades, but I do like swing highs, like the swing high and swing low, and I love pivots. Those are free. Those are free ones to use. The VWAP is now free, but the VWAP wasn't always free. So of course my best indicators are the ones that I paid for. So I paid for VWAP, I paid for a super price predictor, and I paid for divergence. Those are great indicators. They work really well. But these free indicators, you can use those as confirmations. Like this was a swing high, and it was confirmed by the Don Chain channel. It'd be a good area. You see when the market shot up here, it went a little bit above it, but it ultimately came down below. Because You just had a little confirmation. You can speed, and I also like practicing because you can speed up the practice. Let's speed up to 9:30. And I always say I don't trade at 9:30 because the 9:30 open is always hectic, especially on NQ. Sometimes gold, it don't be that crazy on gold, but on GC will tear you up if you don't know what you're doing. It's 9:27. All right, let's slow it down. All right, a couple seconds before 9:30. The market's gonna go a little crazy as always. And I like to wait at least 5 minutes after the open. I like to wait at least 5 minutes so we could, give it time to relax and calm down from the open. And then also when it's doing this, I like to squeeze it and look at a couple levels. And I can see right here, you got the central pivot. You got some levels up here that look pretty strong. Going down below, you have the overnight low. You have this S1 and 1 hour level that looks really strong. You see divergence just popped up right here. So I'm like, okay, that's a good little divergence area, but it's still 9:30. I like to wait a little bit longer before I jump into a trade. And sometimes on evals, if I see a good area, like if I seen this divergence, you got a Don chain, I probably would have took a short with the eval, but I already have PAs though. If you don't have any PAs, don't risk your evals. Treat your evals like a PA if you don't have PAs. Because I want you to pass those evals. So trade them just like you try to make real money. But once you start passing evals, I'd rather you take more time with your PAs and you could trade evals a little more loosely, take a little more chances with the evals because you now have PAs and you're trying to just pass evals now. But until then, just focus on $100, $200 a day until you pass it. And once you pass it, you done built up a habit. You'll continue doing that $100, $200 a day with your PA, or go to micros. You can do either one. But if you're consistent with $100 to $200 a day, then when you get your PA, you can continue doing that. All right, it's 9:32. It calmed down a little bit. All right, I'm ready to trade now. Some people like to wait till 9:35. It's just up to you at that point. But I just like that within that first, 2 to 3 minutes of it opening. That means 2 minutes before and 2 minutes after. Because I definitely don't jump into a trade 2 minutes before 9:30. And once again, the only levels I'm really looking at is around this central pivot area. And now because divergence popped up, that could be a strong level as well. Because since it was divergence, that means it still could be some divergence in that area. But right now I'm looking at some trades I can take. I like the Don chain right here. Of course, I like the VWAP. But right now the market is indecisive. It doesn't really know where it want to go. And you just have to watch the market. I have my special areas that I know for a fact, hands down, I'm taking a trade there. Central pivot, 9 times out of 10, I'm gonna take a central pivot trade. VWAP, VWAP is not always 100% because I like to see what's happening around there. Right now, the market is kind of just chilling in the same area. So it could shoot up or shoot down at any moment right here. So I think trying to buy it right here is just too close. Like that's literally what I'll be thinking when I'm trading. I'm like, okay, that's a little too close. I like it to go a little bit farther away from my levels and then come back to it. So central pivot hasn't been touched yet. I would do a resting order at central pivot.
Order submitted.
I like to do that one. let's see. And this is what I do when I'm trading, but when I'm practicing, I still keep it very similar, right? So I like this level up here. I'm like, you know what? I like this level, even though these levels do change a little bit.
Order submitted.
When this is the EMA, it is the EMA of the VWAP. This little EMA does adjust. So if you want to take a trade from it, you're going to have to adjust it as the candlesticks move. But when I'm practicing, I would just put resting orders at certain spots, and I would literally journal what happened when it got to my level of that resting order. Because when you practice, this is the best time to see what could have happened, what would have happened, so that you can, when you get into the real time of the market, you already been practicing that same strategy. It's almost like muscle memory. Because remember, in practice, you're trying to learn something new. So don't be scared to take trades in practice that you normally wouldn't take on a live market. Because that's how you get better. That's how you learn. You can say, okay, you know what? The last time central pivot happened, it missed me. So I'm a front run it this time, just a little bit, and see if that works a little better. This is when you perfect your entries. This is when you work on your entries. This is when you look at the ATM strategies that I gave you, and you say, you know what? I'm gonna switch this around just a little bit. I'm gonna add a different. Hold on one second. This boy. Snow days. He need to go outside. When I was a kid, I was outside the whole day. It snowed. All right. So once again, this is where you want to practice your ATM strategies. Change them up a little bit. Look at the ones that I sent in Discord. I put them in Discord. Go in there and build those as well, and until you find your ATM strategy. Everybody's ATM strategy is going to be slightly different. So I give you strategies to start off with, and practice is where you perfect those strategies. Like even with this level right here, it bounced off of that one. Okay, why did it bounce off that one? You have a swing high right here. So you have the swing high. That could have been a reason why it bounced. Like you like to write down reasons why it does that. Y'all hear it going off. Time and sales. I like to have time and sales up when I'm practicing as well. Cause look at that. That was GC, but yeah, somebody put in a 90 contract on GC. But since we're practicing on NQ, keep it on NQ. And look at what happens over here on time and sales and how the market responds to certain things. That's how I got good with time and sales, because I would notice when I see a bunch of orange going in, look at it going down. The orange going in is going down. When I see a big level, 60 contracts or more, I'll notice that, hey, that thing is really reacting to what that time and sales is doing. Even though time and sales are receipts of people actually putting trades in. I don't want to see 1 and 2 contracts. Me and you do 1 and 2 contracts. I want to see 6, 7, 15, 25. Where's the big, look, all these green going in, look what the market's doing. It started going up from all the green popping in. Look, a whole bunch of orange come in. You'll notice that mug will start reacting to it. Is really reactive to exactly what's going on. These are little 6, 9 contracts, and just pay attention to how it moves. And and if you guys been here for a while with me, you'll notice when that buzzer go off and you'll see 85 contracts to go short. You'll see me sometimes. I'll just click a short. I'm like, oh y'all, 80 contracts, 100. One time they did 400 contract long. I didn't think twice. I just bought the market right along with them. Because anybody that's willing to do 400 contracts, hey, you got my vote. Those are market makers. Those are people, those are hedge funds and all that stuff putting in them big contracts. So when you practice, those are times to see how that stuff actually affects the market, so you know what to do when it happens. It's 9:39. And I think by this time on Fridays, a lot of us already took at least one trade. Because we be trading pre-market for the most part. And I like trading pre-markets. Pre-market is not as volatile, especially on gold. Now you see up here where it says 84% chance of a short, right? Now, when it says a big chance like that of a short, I'm not really looking for any longs. I'm like, okay, what is happening up here that I would like to take a short from, right? Because it's still going up, but 84% chance of a short, but where though? Okay, we got a central pivot right here. We got divergence popping up. This is where my 84% chance of a short is going to happen. You can either wait for it to get up here, or you say, you know what? It bounced off this level. I'm gonna put it right here and see what happens. Because I've seen it bounce off of it 3 times already.
Order filled.
Order filled.
Gotcha, bitch.
You see it? Y'all see how it bounced? It bounced 3 times right there. All right, well, I'm gonna drop it right there where it bounced off of it. Because I told y'all about that 3 tap. It tapped twice, tapped that 3rd time, went down. So 83% chance of a short, yeah. You just gotta find, okay, where we think it's gonna go short at. All right, I'll take another trade right here. Got a good central pivot. That's a good area where it normally goes short at. Oh, hold on, I gotta get rid of this one.
Order canceled. Order submitted.
No, that's normally a good place. 83% chance of a short. I'm not looking for any, even though it's going up, 83% chance of a short, I like to look for a short then.
Order filled.
Look, we up 100.
Gotcha, bitch.
You know what I'm saying? Like 83% chance of a short, I'm not looking for longs. Now, if you have a bigger account, you could have went long and just left it alone. But right now, if you haven't got a payout yet, if you still trying to pass an eval, you need to worry about $100 to $200 per trade. Get in, get out, lock that money in. Because we're trying to get to a payout. We're not trying to get to a payout in one day. We're trying to pass these evals, get to payouts. And look at that, it's 941. I took a couple trades at $100, $120 a pop. I'm up 300 by 941. I wasn't rushing it. I just seen that it was an 83% chance of a short. Divergence was popping up, and we're right at a central pivot. I'm taking the short. And you could have stayed in that short longer.
Strategy?
Huh?
What was that ATM strategy?
Right here. 40 stop loss, 30 profit. But you can put that profit wherever you feel comfortable. If you wanted at 20 ticks, you wanted at 10, you wanted at 35, whatever your average is, that's why you need to find what is your average per trade and just put that target at whatever your average per trade is. But if you could do $300 in a matter of what? The market opened at 9:30, it's 9:42. That's why people keep blowing accounts and keep tearing up your accounts, because the hardest part about trading is stopping. Once you learn the strategies, once you can recognize legit support and resistance, once you can recognize where the liquidity zones and where the sellers and buyers are at, you just need to know when to stop. Because 300, you times that by 20 trade days a month, that's $6,000. That little bit of movement. We've been here for 13 minutes, from 9:30 to 9:43. We done made 300. If you can do that every day for a month, you're clearing $6,000 a month. You times that by 3 PAs, 3 PAs. You could have copy traded that. You could have copy traded those trades. You see how fast they happen. That's right. That's 18,000. 18,000 a month. If you could just do $200 to $300 a day with three PAs. You don't have to make 1,000 a day, people. That's why you're still trying to get to that payout, because you're trying to do too much. But now, like, once you start building that cushion, once you start building that $2,000-$3,000 cushion, look, that same trade, 83% chance of a short. I'm gonna wait till the central pivot. I'm gonna take that trade at the central pivot. I'm not getting out that trade. I'm gonna stay in there for at least 10 minutes. Look at it, dropping like a bad habit. Once you build that cushion, that's when you can make that $800-$900 per trade, that $1,000 per trade. Once you start building that cushion in your account. Until you have a cushion, you need to focus on 100 to 200. Trust me, it sounds like it takes forever. It's going to take forever. It's really not. And you're going to feel a lot better about yourself. You're not going to keep getting mad every time you lose $400 or $500. You know what I'm saying? Once you get that cushion, once you have a nice little cushion in your PA, then you could take a short at central pivot and stay there for 10, 15 minutes. But until then, you need to focus on the short pops. Jab, $100, $200, $150, $75, whatever you can do consistently. That's what your target needs to be. Look, now we had 92% chance of a short. Once again, look at all them orange levels popping in. They tried to push it back up. That didn't work. They tried to push it back up with that 63. They came back with a whole bunch of orange. Short, all that shorts. You know what I'm saying? So when I see, if I'm in the short and I see all these orange popping up, I'm gonna stay in that short. You know what I'm saying? This is how you stay in trades even longer. You know, if I'm looking over here, I see plenty orange jumping in there, I'm gonna sit in that trade a little bit longer. Try to get all that money. You will get to this point. You will get to this point. But before you get to this point, you got to focus on $100 to $200 per trade until you get a payout and start building that cushion. Then you could get to this point where there is no area that you want to get out. You gonna get out when you good and ready because you practiced, you have a cushion in your account, and you're probably running this strategy right here, which I don't even have a target. I don't even have a target. I just move my stop loss and follow behind it when I feel like it. That's how you get those big trades that I post. And as long as these orange are popping up in here, I'm gonna stay in this trade. So that's how I know when to get out.
Hey, well, on the super price predictor, what settings do you have on it?
I didn't change any settings.
You didn't change it, just right off the shelf?
Yep.
Okay.
Yep. I keep the same thing on here. Well, maximum look back, you don't want that to be infinite. I think it's already preset to that 256. And these numbers change based on how many days you have loaded.
But you normally don't load a lot of days, right?
Yeah, I don't. Let me see how many days I have loaded on this one. Like this one has 65 days loaded because I had to look further left. But it counts. He told me that count means 127. So
127 candles or days?
Yeah.
Candles. Okay.
Yeah, but yeah, the only one that I changed the setting that he told me to change the settings was divergence. But look, divergence was perfect. Look at that. It stopped right at the central pivot.
And what are those to the right there, those lines? Does that mean anything? You know that
this right here?
Yeah.
Yeah, that's super price predictor.
I mean, I know that, but I don't need to interpret that or anything.
Yeah, it's telling you what's the most likely path of the next candle.
Oh, that's telling me so short.
Yep. Yeah, 92% chance of a short, and this is how it's going to look.
So it's represented in those colors.
Yep.
Got it. Okay.
I gotta let it ride, baby. Woo! Sounds so good if you haven't heard it in a long time.
Right here, average style, band style, most recent, best fit, and best fit. So when you look at this one here, this is the best fit. This purple one, or pink, however you see it.
So is that saying I should put my resting order there?
It's telling you short. It's going short.
Okay.
Now, sometimes like if it's more closer, like say it's like 70% and 30, you might see one of them going up because it's like it's still a chance to go up, but it's more likely to go down.
No, that
So
makes
because
sense.
it's so high, 92% chance, all of them are going down.
Okay. And I mean, I don't have this. How often do you get like over 80% in one direction? Is that often?
It's per candle. So every new candle that pops up,
Oh,
it'll tell you
okay.
something different because it's a
Okay.
live indicator.
Okay. Wow.
Yep, so every candle, it tells you something different.
Okay.
Like the last one was 83%. This was 83%. Look, 83%, it went down.
Yeah.
This one
and
is
that one
92.
too, even though it's going to probably end green, I mean, you still 92%. I mean, it still went down. You still
Yeah,
would have hit your target.
So this one tells you what's more likely to happen. It don't tell
Right.
you when necessarily.
Right.
It just says on this candle, you have a higher chance of a short. So I'm looking for areas to take a short. So I would like it to come up to here. I would like it to come up to here. Let's go short. Now look, the next one says, now you're pretty much 50-50.
Yeah. So
now look at this.
Get
See
on
how
out
this is
of
going
that.
sideways. It's just going straight to the side.
No direction.
No real direction because you're 50-50. So now you want to base it off of your levels and not so much your percentage.
Oh, wow. Well, you making a killing, ain't you?
Oh, as far as trading, yeah. Oh yeah. Oh yeah, because I'll be following these levels like clockwork. That's why that day I couldn't trade. As soon as it started working good, I made like 1,500 on one PA and 660 on the other PA.
Wow.
I was like, y'all gonna get my money back and not let me trade. But all I do is follow the levels.
That's
and,
it.
and the indicators.
Right.
And y'all know I love the pivots. Central pivot, R1, S1, I don't care. I'm gonna take a pivot, win, lose, or draw.
And I get a discount on that price predictor.
Yeah, just use Mr. H Trades. It's a 50% discount.
Oh,
Those indicators are 500 a pop.
yeah. That's why I hadn't bought one.
Yeah. Tyler boy, he got some indicators. He got a bunch of other indicators. I just never used the other ones.
No.
I asked him, I was like, what is best two? And he said, these are the best two. I was like, all right, let me get those then. How much?
Have you guys made any progress on the that super oscillator thing you were talking about?
Super oscillator?
But remember the I know I'm messing it up, but you and him were collaborating.
Oh, stochastic differential equation.
Stochastic differential.
Yeah, he's testing it. He's just like, it's a lot to that equation.
Okay.
Because it's crazy. It's like if you Google it, it's actually a mathematical equation. That's how they know exactly how we gonna trade.
Oh wow.
They know exactly what our habits are. That's why I teach y'all to get in your entries are slightly different. So that's why, like one of the entries that I do, I'll put a resting
Order submitted.
far up, and then I'll just hover where like if I want to get in a trade here, I'll just wait for it to get up there and see if it bounces once, twice, and that third bounce, I'll just drop it down on top of it.
Order
That's one of the
canceled.
strategies I used as my entries.
Okay.
But most people, what they'll do, they'll just put a resting order right
Order
here.
submitted.
Right.
And they know that's how most of us trade. So what they do, they'll hit that level, they'll
Boom.
sweep up above it, take all y'all little lunch money, then they'll come back down.
Yeah.
So I have mine a little higher and I'll just float. I'll let it touch that level. If it goes through it, I won't touch it. On the way back down, I'll drop it on top of it.
Order
My
canceled.
entries is usually different,
So Miss-
unorthodox from what the average trader trades. That way I'm not stuck in that stochastic equation.
So Mr. H, do we lose money when it says order canceled?
If you cancel an order, no,
when
unless
it
you're in a
cancel.
trade.
Okay. So if we in a trade and we place an order and then it say order canceled, we lose money.
Yeah, now if it order canceled, that means you lost that account. That means you lost too much money and it blew the account. If it automatically cancels your order and it didn't hit like a stop loss or anything.
Oh, okay.
But now, Will, sometimes, like if you've got a runner on there, it'll stop even though it didn't hit your target. Right?
It stopped you on a runner?
Well, if I've got a runner, let's just say, and my, like for instance, the 40 and the 40 with no profit target, that I'm keeping track of that trade. It never hits a target, right?
Because there is no target.
Because there is no target. So it'll just once I guess your trailer hits the price, it'll just close it out.
Yeah. Now if it comes back and hits your trailing stop, then yeah.
Right. Okay.
Yeah. So like there's times where if it's moving real good, if my trailing stop moves too fast, I'll back it up. I'll click on that red flag and I'll move it back a little bit, like, hey. Or you can also right click on the flag and you could remove the trail. You can remove it from trailing automatically while you're in a trade. You can stop it from moving at all.
Okay.
And you could just manually do it.
Okay.
The reason why I have an automated trail is because I have other accounts. So if this account is in a trade, I just trust my automated trail, and I'm over here trading other accounts. But if I'm only trading one, I won't let it trail itself. I'll trail it myself. I'll manually move the trail. So it just depends on if you want to trade other accounts at the same time, then put an automated trail on there. But if you're only trading one account, then I'd rather be the one that trails it. Look, very next candle. Now we back to 80% chance of a short.
Yeah, Friday was a weird day for me, Will.
It was definitely a weird day. I agree to that. It was, but Fridays are always weird because it's the end of the week.
Well, and you had Thursday where you had such strong trend, that double distribution. It was just, you just throw the trade out there and it's making money.
But once again, that's when the percentage of trade days. You have your test and retest.
That's right.
You have your narrow range trading day, and then you have your trend. If Tuesday is a trend day, you probably not gonna have another trend day for another week and a half.
How would I know though at the beginning, like at 8:30, that it's gonna be a trend day?
You don't know at 8:30. You don't know. You don't know a trending day until after 10.
Okay.
After,
and what's
when
my? How do I know?
10, you're like, oh, it did trend to the downside for the most part.
Okay.
Or you could know, like, okay, it's been mostly down since open. It's 10 o'clock. It's probably going to keep going down till at least 12.
What about your sideway day?
That is a narrow range trading day.
Right.
The way you trade, like today, right now, is pretty much narrow range trading day.
That's what Friday was. That's the most common type of day.
That's the most common type. You can see the central pivot is the highest, and the lowest is right below this candle right here. This is pretty much the opening candle. So this is where it opened up at. It hasn't went on the other side of the open yet.
Sure hasn't.
So it's a narrow range to one side. So the bottom of the open to the central pivot is the range. So as it comes higher, I'm taking a short. Look at that, 123 contract buy. I'm buying it.
Well, you're at 80%
I'll just buy it and see what happens.
Yeah. Order filled.
Buy it and see what happens.
Wouldn't you move that stop to the end of that candle or no?
Well, you see, it jumped in at 900.
Oh,
it jumped in at 900. So I would like for it to go. They wanted to go above 900 because they bought it at 900.
At 900, got it.
123, but you got to give. Well, I have a bigger account, so if you give yourself some room, you'll just let it play out. Just give yourself some room.
Order filled.
And see how it plays out. Because 123 contracts, it ain't just gonna ignore that.
No, can't.
So but they put it in at 900, so it's not effective till it get back to the 900. So I will sit there and see how it plays out.
Yeah.
When you're practicing, of course. When you're practicing, because you want to see how fast that 123 actually works. So when it happens in the live market, you're like, oh, well, when it happened in practice, this is how it played out. So in the live market, all right, I know exactly what happened. I'm gonna jump in on there. You could have waited for it to come down here. But that's
your
what I'm
short signal saying 81%.
Yeah, because they're trying to put, that's the market maker trying to push it to a certain level.
Okay.
They're trying to push it to a certain level so that it don't drop so fast. Because remember, these people at these professional companies, they have certain things that they have to do per day. Because they got people above them that say, look, we can't let NQ continue to drop, because I've been here where it dropped too much and they'll turn the market off.
Yes, you're right. Yeah.
I was trading when that happened last time.
So they went across the board then. I thought that was just like on the option chain, but they did it on everything.
No, if this market moving too much, they will stop trades from happening. They be like, nah, y'all got to stop this.
No such thing as market manipulation.
Yeah. Yeah. And that's why they have news. They literally have news because news makes it legal to manipulate the market. News is what makes manipulation legal. Because they like, hey, look, we told y'all at 10 o'clock this was going to happen.
Sure do.
We have it marked off as a red folder. If you lost your shirt, that is your fault.
That's on you.
We manipulated it. Yeah, we manipulated the market, but we told you when we were going to manipulate it. Right. We just didn't tell you what direction it was going to be manipulated. You know what I'm saying? You're not a part of the text messaging group to get that information. Just like they get mad that senators and stuff like that can buy shares and they know what's going on. I can't remember. I'll find the website, but it's a website that they have to post what they buy and what they sell, but it don't update until hours later. But that's why they can legally buy and sell shares knowing they got the inside scoop on things, because they have to post what they did. They just don't have to post it immediately. So everything has a level of tampering, so to speak. You just have to be aware of that and know how to move in a room full of vultures. That's why my $100 to $200 strategies work so well, because they don't care about your little $100, $200. They worry about the big dogs trying to make thousands and millions. That's the ones they're worried about. They're not worried about us trying to get $100, $200. If you trying to get 1,000 in one trade, let me know how that goes. Let me know how often you make 1,000 per trade. Because I can show you how I make 200 per, how often I make 100 to 200 per trade. You know what I'm saying? And I normally get to 1,000 with 5 accounts way faster than you'll get to 1,000 with 1 account.
Yeah.
I could literally copy trade 5 accounts and at a $200, and I get that in 20 seconds. While you still in one trade hoping to get to 1,000. Y'all see how I bounced off that VWAP?
Sure did.
Nice VWAP bounce. That's why I like the VWAP. I like central pivot, especially when central pivot line up with a indicator. Any indicator. Like this one right here, you see you got Don Chain. Don Chain is right there. Then you got divergence right there. You got central pivot. I'm taking that. Win, lose, or draw, I'm jumping in that.
Set it up.
You know, but this is why you practice every day, or when the market is not open, you practice because you want to. Because this is exactly what happened on Friday.
Sure
this
did.
is not fake. This is exactly what happened on Friday, so you know how to move. And once again, you can speed it up. You can rewind it by like, man, let me take that trade again. See a good entry, how to enter that trade.
Hey, Sensei.
Yes.
Show us how to set up that VWAP and utilize
Now, you echo and say that one more time.
Show us how to set up that VWAP and utilize it. How to take the trade off of it.
Oh yeah, the VWAP. I don't change nothing on VWAP either. Nothing on my VWAP is adjusted. I take it just the way it's sent. So I don't do any adjustments. I mean, like right here, they have like these lines are. This is the VWAP. The orange and the purple line is the VWAP. Now they have upper band, lower band. That's all the little dash lines, right? So I don't change anything on the VWAP. But the way I trade the VWAP is this yellow line or purple, because sometimes that line does change purple. When the market is below the VWAP, it's purple. When it's above the VWAP, it's yellow. Right? I trust taking trades off of that yellow line. Right? I'll take trades off the yellow line by itself, no problem. Or purple line. I'll take trades off that central level anytime by itself. If it lines up with another indicator, so say like it lines up with divergence, or it lines up with a swing low or swing high, it just certifies why I would take that trade alone, you know, or by itself or alone or with something else. These the little separate ones, the little white lines or white dash lines, those I like to trade those with something else. I don't normally trade those by themselves. I will have to have something else that lines up with it before I take those trades. But other than that, that's the way I use the VWAP. If it lines up with something, I'll take these little smaller VWAP lines. But the central VWAP, which is the one that actually has a color to it, I would take that by itself or with confirmation. But any other line, I need confirmation for those other VWAP lines.
You put resting orders in, or
very rarely do I do resting orders. My resting order looks like this. I'll put a resting order far up here, and if I want to buy, like say I want to buy it, if it come back up here, I would just wait right here till it came back. And if it comes back up to this area right here, then I would just drop it down on top of it. Because I want to see what it does first. I want to see if it bounces two, and then that third bounce, I drop it on top of there, take the short down. That's how I trade. That's how I trade my resting stop. But a lot of times what it do, it'll bounce, it'll tap that level. This is the same candle now. Same candle, it'll tap it, it'll come down, and then it'll go past it. That's not my 3 taps. I no longer look to take that trade. Now I will wait for it to come back down. Now on the way back down to this line right here, then I'll drop it down on top of it on the way down and get my trade. So that's how I do resting orders. Instead of hitting buy and sell, because when you just hit buy and sell, it might get you in at the level, it might not. It might get you close to it. That's a little bit more, you know, quick draw McGraw type level, type trading. You know, but I don't really do resting orders unless I want to trade another account. So I'll be like, okay, if I wanted to get here, I'll put a resting order right here, and then I'll go to another account and I'll start trading something else just in case it gets there. Because I don't want to miss the trade though. But if I only have one account, I don't put a resting order if I have one account. Does that help?
Yes.
All right, cool. All right, we have 127. Anybody have any questions? Anything you need a little more explanation with?
Well, this has been a great session, Will.
Awesome. All right, everything good. And again, welcome, James, Mr. Cranberry. Granberry, how you doing? Welcome to the class.
Hey, Sensei.
Thank you.
Yes, what's going on?
Okay, so like that, the super price situation.
Mm-hmm.
How does it look when you get it down? When he downloads it, where's it located?
It should. Hold on, let me see. It should go to your downloads. It should be in the same place where all your other ones are. But as far as what it's called, I downloaded it so long ago. Oh, I can't remember what it's called though. I mean, it should say price predictor or something like that. Let me see if I can find out what it's called. Script assembly. Oh, it says MT Super Price Predictor.
Yeah, and on mine, Will, he has a folder in my indicator deal.
Yeah,
that says like T More or something like that. So
it'll be under that too. So after you download it, it'll go to T More folder. It'll go to a whole folder for T More.
Yeah, more tech. I'm sorry, more tech.
Yeah.
Okay, so it's going to be in documents.
Order canceled.
First.
It should be in downloads wherever you download it. It depends on where you have your computer downloaded. That could change. I'm not sure where your computer downloaded it to, but it should be MT Super. It should start with MT, just like the versions start with MT Divergence.
Yeah, I'm gonna get with you later on. What you
Yeah.
doing tomorrow?
Nothing. Looking
Okay.
at the snow. Because it's a lot of snow. Way more than the last time. I was like, oh, they got us this time.
What time? What's a good time for you? 12?
12 is fine.
All right.
Yeah, that snow came down today. But all right, guys, this is recorded, so I'll post this one along with Friday. I think I still got to post Friday session too. But yeah, I'll get those up there today. All right, and then once again, if you guys have any questions, hit me up. If you haven't got your affiliate code yet, just inbox me with your email so you can be added to the affiliate list, because you do get 20% for every person that clicks your link and becomes a student. We spread the wealth. All right.
I'm having problems with that, Mr. H. My affiliate code is not working. I still can't comment or anything.
Your affiliate code not working. Hold on.
Mm-mm. Okay, I'll talk to you tomorrow, though.
Okay, yeah. We'll do it 12 o'clock tomorrow.
Okay.
All right. Enjoy the rest of y'all day, and I'm about to chill in the living room because it is cold outside.
All right, everyone. Have a good weekend.
All right, see y'all later.